Good evening, all. This is Jay Horowitz, ShogunTrading.com. This is our free weekly newsletter. There are a few things that have surprised me this week, and I want to show you a couple of them. First of all, the market is going up, and it's surprising because of all the bad news that's out there. Remember that the market is always trading 6 months ahead, sometimes even 9 months ahead of what's going on right now. So whatever you think the economic situation is right now, think 6 months ahead. Is the economy going to improve even a little bit in 6 months or in 9 months? Are we going to be better off than we are today? And what the market is saying right now is that they think it is. There's a lot of bad news out there, though, and it is surprising on how strong, how resilient the market really is. We were going to go for a tremendous downtrend. Let me show you. This is the NDX Nasdaq 100 on a weekly basis, and you can see that we came down hard. After a very long-term uptrend, we came down hard, and it looked like we're going to come down even harder. We're going to break the red line, which is the 200-week moving average, but instead we bounced off of it, which to me is absolutely amazing. Here's S&P 500, and you can see basically the same thing. Please excuse all these lines. But you can see basically the same thing, a double bottom, bounce off the 200-week moving average, and coming back up. How long is this going to last? Are we really going to go up, or are we going to go into a long-term downtrend? I don't think we're going to go into a long-term downtrend. I think that the Feds are basically protecting the market. They're supporting the market. Every time that the market has any kind of weakness, they come out with this major announcement that makes the market come back up. Which to me is market manipulation, but eventually they're taking the air out of the tires of the short sellers. Every time that the short sellers come in and they try to short sell the market, the Fed smacks them on the hand, and they go away again. And what that does is, instead of having a downtrend that actually flows down, let me show you. Instead of a downtrend that actually flows down like it's supposed to, you get a downtrend that actually goes sideways. Why? Because they're taking the short sellers out of the market. And that's the reason why the market really hasn't moved a whole lot over the last few weeks. Yes, we've been going up 300, down 300, up 300, down 300, but overall we did not really move a whole lot. There's a daily chart, and you can see that we're basically sideways. Not a whole lot, especially those 300-point days are all basically sideways. Are we going to have a lot of upward momentum right now? I don't think so. We are in some select stocks and select sectors, and that's what we have to. That's the job of the stock picker to really find out what it is. I think that if you're investing in any kind of ETFs or investing in any kind of indexes, it's been pretty boring because they're not really moving anywhere. But stocks are moving. Here's an example of one of our trades. Apple. I think you've heard of it. We came here at 134.38, and the stock is still going for us. It's not stopping. It's already all the way up to 154 from 134, up 20 points on it in just a couple of weeks, and it's not showing any signs of slowing down. But that's the amazing part about it. That's the reason why I said I was amazed by the market, because of this resilience, because of this strength in their faith in stocks like Apple, that they're saying it's the basis of our economy in a way. So that's the technology stocks, and you can see them quite a few of the technology stocks that look like they're ready to come up. I was looking at the dollar, and the dollar looks like it wants to form a bottom over here. But after this very, very long-term downtrend, to form a bottom is going to take quite a bit of effort, and I'm not quite sure we're there yet. We really have to break above that 73 level on this specific index in order to really start coming back up. But, a bounce right now is pretty normal. Notice the blue moving average, which is the 50-day moving average, and the yellow, which is the 21-day. And notice what happened over here and how far away we were from the blue. And a bounce is normal. That's okay. Does not mean that we stop coming down. So, there might be a little bit more left over here. I went out to brunch this weekend in a very, very nice hotel in the old town in Coral Gables in Miami. And it was just absolutely amazing the number of tourists. They're coming into the U.S. right now and spending their money in the U.S., which I think is a great thing, and I think it's great for our economy. But that is one of the benefits of a lower dollar, which I'm seeing. One of the sectors that looks pretty decent is the home builders. This is the home builders, and you can see that they formed some kind of a bottom, weight shape consolidation, starting to come back up, broke the 200-day moving average, which is the red line. All of them are pointing up. Now, if home builders are starting to come back up, that means that the home, the real estate market is starting to unwind its problem, and which to me makes sense, and I think that the real estate problem might be solved fairly soon, a lot sooner than most people think. I think within six to 9 months, I think we're going to start seeing some movement there. So that's pretty nice. I was a little surprised by the energy spiders and by the materials that they went back up. Gold went back up a little bit. Of course, it's normal. It's still in a very, very strong uptrend. I am expecting a downturn in the basic materials. Downturn in the basic materials. Dollar coming back up. Home builders coming back up. I think that within the next 6 to 9 months, I think we're going to see that inflation is going to subside. I think we're going to see the dollar starting to come back up. I think the Fed is going to relax a little bit. Rebate checks are going to come out. I think that real estate loans are going to reset down instead of reset up. I think we're going to be able to breathe a little bit, and I think we're going to propel forward. And that's my thinking, and I think that the market itself is thinking the same thing. And that's the reason why the S&P 500 and the NDX and the Dow Jones Industrial Average all starting to come back just a little bit. Now, this is a very fragile system, and everything I'm talking about right now can be destroyed in a heartbeat. But that's what I'm looking at. That's the way things are looking right now, and hopefully nothing will hit us, and we can propel forward. Anyway, there is still quite a few stocks that are working pretty well, such as Apple, HW, and so on, that are working very well for us. Not as many as usual, but plenty to make a pretty good money. Most of our stocks right now are moving 2% to 5% in the first couple of days, which is what's exciting to me at this point, when the market itself is not really ripping in major trends. I'm going to update the performance on our website. Watch for that. I am also going to update it with options performance data to show you what the power of options can do to our type of trading. So watch for that sometime this week. Monday, Tuesday, or Wednesday, I should be all done with the performance. What I usually do is I wait for the month to be over in order to post a performance. And the reason why we do that, excuse me, is because we want to allow every trade, even the trade we call on the 31st of the month, at least a few days to work itself in order to post it on the website. So that's why we wait for a little bit. Anyway, have a great week, and I will talk to you next Sunday. Take care.